Anand Roy, Managing Director with Star Health, joins us now. Let's take our conversation forward to understand numbers and how the big picture is looking like. Anand, good morning. Thank you for joining us. Last 1 year has been full of twists and turns for insurance and for health insurance. What is the update there? Is the worst of the COVID claim, the large write-offs, the large charges which insurance companies had to bear, is that behind?
Yeah, thanks a lot for having us. Definitely, I think it is encouraging. The last quarter has been returned back to normal, so to speak. We are seeing some amount of normalcy coming in as far as the claims outgo is concerned, which, as you rightly mentioned, was very, very elevated during the entire financial year. But as we speak for the last quarter, and especially for the last 2 months, that is February and March, if you look at the run rate, we are kind of coming back to the pre-COVID levels. So these are encouraging signs. And we believe that, the worst is behind us. Now with the high level of vaccination and also these new waves, though they are occurring, but they are not resulting in any large hospitalizations or deaths. I think that's a good sign for the entire society and, of course, for the industry of insurance in general. So I could say confidently that the worst is behind us and normalcy is kind of setting in.
Do you see a case that somewhere in FY23, the premium the rates which you charge on insuring somebody, which is premium, the policy premium, will that go higher? Because FY21 and FY22, because of COVID, perhaps nobody wanted these premiums to go higher.
Yeah, you're right in the sense that definitely there has been substantial elevation in medical costs in the last 2 years. And to match that, insurance companies will have to take some hike in premiums. We have already seen that happening with various companies have repriced their products. So have we. But going forward, we will have to see how this plays out, because if the medical inflation continues to remain as where it is for the last 2 years, definitely it calls for some increase in premium. And as a company at Star Health, premium increase is our last option. We have followed that strategy. But if the situation does not come back to normal like it used to be, we may have to take some rate hikes.
Interesting. Across product categories or anything specific?
So as you know, the pricing of products are regulated by the insurance regulator. We have to go to them with justification for repricing any product. So we did reprice one of our large products. We are looking at repricing a couple of more products in the near future. But having said that, we have also launched some interesting products in the last quarter. And these products also are well priced and are taken off very well. So it's a mix and match approach: reprice new existing products, launch new products, and ensure that the customer has a wide variety of choice so that they can choose from which they want to.
Anand, so tell me, with COVID behind us, fingers crossed, I don't want to talk too soon, where's the next growth impetus going to come in from? How are you looking ahead, say, 2 to 3 years from now?
Sure. So see, health insurance business in India is extremely underpenetrated, and with the awareness that has been created after this pandemic, we believe that, the growth of health insurance is here to stay at least for the next decade or more, because it has already become the largest segment in the general insurance industry, the health segment. And we believe that it will continue to be the fastest growing. So as far as our company is concerned at Star Health, we have always been looking at expanding the pie rather than, just keep cannibalizing each other's business. So we are now looking at 3 major areas of expansion. One is the rural markets and the semi-urban markets. These are areas where we see a lot of opportunities, a lot of awareness has been created. So that's one area we are looking at. Of course, we are also looking at the small and medium enterprises, the SME segment, which is a major growth driver for us in this year and future years also. And last but not the least, the uptake of digital business has substantially increased, and we have seen younger people coming online and buying health insurance. So that will be our focus area as well. So with these 3, verticals, we believe that we'll be able to maintain a very, very higher than the industry's growth rate.
How do you see the underwriting premiums moving? Because when we speak to some of your peer companies, they've told us that the underwriters, in a sense, right now are very risk averse, or they were risk averse. Do you see that normalization coming back?
So health is divided into two large segments: health business, health insurance business. One is the group business, which is largely the corporate business, employer-employee groups. And then we have the retail business, which is the individuals and families who buy policies. As far as underwriting of the group business is concerned, definitely at Star Health, we have taken a relook at our entire underwriting process. And this definitely is an area where premiums have to go up because it continues to be a loss leader in the health insurance business, the corporate groups as such. So we have taken a call on this particular segment, and we are very extremely conservative in underwriting this business. As far as retail portfolio is concerned, as I mentioned earlier, on a product to product basis, we do take price hikes if required, but that is our last option.
Okay, I'm just going to shift gears and also broadly talk about the direction of the CD ratio, the most important ratio which shareholders look at in order to understand the directional call. I am jogging my memory here and looking at your CD ratio which you had declared along with your IPO. There was an indication as to where the CD ratio historically has been. How do you see your CD ratio moving?
Can you come again? Can you CD ratio? Can you expand that?
No, I'm just trying to understand there are two ways insurance companies they make money. One is by float and second is by operations. Some of your peers, they don't make money by operations. Some, they actually make money by float. Can you give me a directional sense on that?
Sure, absolutely. So we call it as a combined ratio in our operations. I think that's what you're meaning. So at Star Health, see, we have a very clear strategy. We do not mix investment income versus our operating income. These are two different lines of income that the company tracks. So our company has been a profitable operating company before the pandemic and for many years before that. The last 2 years has been extremely turbulent. Being a large health insurance company, we were hit the maximum because of this pandemic. But as I told you, now we are coming out of that phase, and hopefully going forward, the next financial year, the current financial year, would be a profitable year. We expect that to come back to the pre-pandemic levels, and on a combined operating ratio basis, we should be viable. And apart from that, as you rightly mentioned, there is an investment book which generates profits for the company. So we would like both the channels to be exclusive of each other, and not we do not depend on only investment income to run our business.
With yields coming, with the yields changing, interest rate and inflation coming back, what will happen to investment income? Will that come under pressure?
So most of our investment book is in fixed income. So they are held to maturity in nature. So we do not expect our yields to come down. And we are also looking, since the last 2 years, the situation was such that we were not very aggressive in the equity side, but we are looking at the equity space also more openly this financial year as far as our investment is concerned. So we expect our yields to sustain and probably improve a little bit. But yes, you're right. It is challenging times, and I think we should be able to maintain our current yields.
Just to wrap it up, with one trend which is clearly visible now, is that how fintech in a sense is changing the rules of distribution. Fintechs are selling, they're changing, they're actually challenging, not changing, but they're challenging the entire distribution network. Your strength is your on-ground field force, your distribution. How do you see that changing at a time when fintech in a sense are really attacking that, both in terms of a channel and also in terms of commission structures?
See, most of the fintech players are our partners. We partner with them, and they distribute our products on their platform. So we do not look at them as a competitor, but rather they are our partners. But having said that, our distribution, as you rightly said, is on ground through our agency. We have 550,000 agents. Last year, we added about 100,000 new agents. So that's going to be our mainstay of our business. We believe that health insurance is an assisted product. It requires a lot of consultation, a lot of guidance before the customer makes a first purchase. And that model will remain for some years to come. So we are investing in our online distribution rapidly, as I told you. But having said that, the core business of agency distribution will remain. The way the agents do business has changed. It has become more technology oriented. Agents are now using laptops and tablets and portals to, close the business. So I think that will change rapidly. And but we do not see any major threat from any major disruption coming from the fintech space.
Right. Anand, great to have you on the show and congratulations once again. I'm sure we'll chat again soon, before the next quarter numbers, hopefully.
Thank you.
Thanks.